a name which I came to know later on, that you can book a company name and it will be on your name for 3 months or so, and you have to pay for something, and again you can renew that also. So you have a time period till you generate some revenue and you can go for the private limited these things. So is there any other options that are also available related to this?
In terms of legal entities, obviously for a sole proprietor there is no registration as such. So you can pick up your own name. The only registration which is normally under the Shop and Establishments Act, and obviously the PAN is also in the name of the proprietor. You don't have to get an extra PAN. When it comes to a company, obviously it is incorporated with the MCA, Ministry of Corporate Affairs, and under the Companies Act. So yes, you have to pick and choose a name, and you have to register that by filling up a form. There is a particular time limit which would be open, and you can keep that name. Under the LLP also, because it is also an incorporated entity, you can register a name. There are a lot of partnerships, I would say, in terms of, since I'm from a legal background, a lot of law firms actually wanted to convert from a partnership to a LLP, though they did not, because there were certain regulations which were still very unclear whether under the Advocates Act you can convert to LLP or not. And even chartered accountants were under, they were confused whether they could convert to LLP, though ICI later came out with the clarity that yes, you can convert to LLP. So there are people who have actually kept the name on hold for 1 year. I'm afraid I don't know whether there is a particular time period for people to keep it on hold if they don't start operations and such. But yes, there is definitely a time limit for which you can register a name and it would be allotted to you. I think your specific question was that how long you can give that name without actually starting things. I'll come back to you on this because there is a question very much specific related to, because this is a compliance thing which is under the MCA, and if they have any particular regulations that how long you can keep the name. So I'll let you know on that. But obviously apart from these two entities, there is no other provision where you need to register it. A normal partnership is also, either you can have a registered partnership or an unregistered partnership. So it is always, good to have the partnership registered. But then again, there is no incorporation as such, so you can pick up any name. And compliance issues are concerned, my other partner deals with the compliance. I only do the advisory and the litigation end. But in terms of all your dates, I'll come back to you on that.
Sir, a few questions. We have two companies. One is like firm, and one is private limited. What happens is basically we are shifting from firm to private limited. So the cost that we are doing right now and the revenue that is coming in the name of firm. But most of the expenses that we are doing right now is in the name of private limited. So how do we do that cross billing to each of the company that can save our taxes as well? Because otherwise in TDS, especially if I raise a bill for my partnership firm, then I need to relate to TDS as well. So and which is the best method to do that?
So you are an existing firm and you are in the process of converting that firm?
We have a private limited as well.
Okay. And there is a cross billing?
There is cross billing.
What are the issues you are facing?
The issues are basically, the question I'm asking you is TDS filing, on the basis of TDS filing, like we have raised a bill for private limited because private limited has made some expenses. So we are charging the partnership firm for that. So in that case, we also need to deduct TDS as well?
Because if you are using as a professional services, because there is a provision under the Act, any fee which is paid for any technical services and professional services, and if the limit is up to 30,000, you don't have to, if it goes beyond 30,000, then you have to have TDS.
Normally it will be more than 30,000.
Yes. Then you would be under that ambit. And since you are a firm, you're not an individual or a HUF, if you are a firm, then you will have to deduct taxes if the payment is beyond that limit.
Okay. Right. And have we discussed about tax planning and all?
We did not address any, so I kept the floor open if you have any specific questions.
Right. So like tax planning, we are a software company and most of our revenue is in USD and other currencies. So what are the best options for me to plan my tax? because initially for IT companies there was very good. We don't need to pay any taxes, but now we have to pay taxes like 30% annum. So what the best method to do tax planning and all? Approaches that we can use, because in the future we may apply for the plot for our own plots and all, so we need investment. Maybe we are extending to some other domains, maybe mobile gamings and cloud computing applications. So in those cases we need the revenue, we need funds as well to, and if we like give a tax to the profit that we are making right now, so it will be hard for me to maintain that balance, to keep that revenue and funds for my further scaling. So what are the best methods for tax planning and all?
The present structure you have is mostly you are getting inward remittances, mostly it's outsourcing what you are doing.
Yes, also services and products.
In terms of, if I ask you the component part of your turnover, is it completely from outside or do you have domestic transactions?
No domestic transaction, not even single domestic.
See, normally, obviously, it's very difficult to give you a broader answer or a
Yeah.
specific answer that how should you plan the tax without looking at your business model and what kind of transactions you are entering into, or if you have signed any contracts or agreements. And in terms of what's your revenue at the moment and how long the company has been in existence,
Right.
and whether any tax planning tools you have used in the past.
No,
So I think it
we are
was very-
startup. We just started 1 year back.
Okay. And you, obviously your accounts are still not audited. What's the turnover of the firm?
Last year it was above 80 lakh. Now it will be more than 2-3 crores.
So your accounts are being audited?
Yeah,
Across the
definitely.
threshold?
Because above 60, I think.
Yes, yes, yes. I think it would be best that I'll give you my email address.
Sure.
If you could direct all those questions, I mean to say, it's very difficult to
Yes.
give you one or two areas, because I think you have to look at every business in a very specific manner
Right.
to see if at this moment you are applying
No,
everything.
no, in general terms, what we can like do in very normal scenario.
I mean to say, obviously, the first thing whenever you have a startup is to make sure that your compliance is in order, because
Right.
sometimes tax itself is a cost.
Yes.
And when you are a startup, you generally don't look at tax as a cost. You look at your rents,
Yes.
or machinery, or other assets that you acquire. And normally you try and just overlook tax, and tax also becomes a cost ultimately.
Right.
So initially, I would say, more than planning, it's very important to see what's your complete tax liability, the tax rates which would be applied to you, and obviously all your compliances are in order in terms of filing your returns on time, deducting your, the taxes at source, and paying your advance taxes. So these 3-4 issues are very important to keep a check on. And obviously, I'm sure you will be having an accountant who is guiding you on all that. But in terms of, there are other issues in terms of claiming depreciations, on all the assets, movable assets you have acquired. So there could be a lot of ways. And in terms of most of your revenue is coming from outside India. I mean to say, I think it would be a lot of currency fluctuations also. You can look at
Right.
how to make sure you have the best optimum advantage of currency fluctuations. So this is separate from the tax issue, I would say.
Right.
And in terms of, since most of your revenue, is it coming only from one particular country, or you have clients
No,
in
no,
different
all
countries?
around the world. I mean, maybe 25 countries.
Okay. Because I think it would be very important, since your business will grow, you will have to look at the international tax aspects also. Because in future, though at this moment it's just clients remitting you money, are they deducting tax there?
Yeah,
If they
this
have
is
to in
only
certain countries?
this is applicable only if we are operating from their home countries. So if we are operating from not from their home countries, then we are not applicable for filing taxes for them. So they might have some W3 form, I'm not sure, W9 form or whatever. So their taxation is separate. I think my question was basically what kind of tax planning we can do so that we can save some like percentage of our revenue to scale our business later on. Because currently, if
One thing
we,
is,
So, like what I understand from your facts is that you are exporting 100%.
Yeah.
So under tax laws, there is one benefit which is available for export, but that is only confined if you are situated in a special economic zone.
Right.
So like if you
Earlier
are,
there was with STPI as well.
no, that is withdrawn from the last financial year. So that is over. That was only till financial year 11-12.
Right.
But the only one tax benefit which is available for export is the SEZ. So if you are an IT company,
Yeah.
you can situate yourself in a special economic zone.
But there is only one specialist has in Quark City. So
Yes,
that is
yes.
very expensive.
We have only one SEZ in this region.
Yes.
And that too because that needs to be structured properly because you are already set up. So you should have a robust expansion plan that you have. You said you have mobile applications and all that stuff.
So one other question, I think I'm going out of the scope is there anything that we can set up some our offices abroad, maybe in Hong Kong or maybe in Costa Rica or somewhere, so that our finance will be managed by separate, billing will be from there or something like that?
I think this is, obviously tax should not be the reason just to go and locate yourself abroad. I think first is the commercial aspect.
Right.
So obviously, I mean to say if you feel that
No,
your
this is
clients,
something for scaling. If I'll pay 30% straight from the revenue, I think how can I scale up, right? Because there will be margin of 40% and the 30% we are giving to the government. So there must be some planning so that we can scale on later on. There is nothing we are we are ready to we're not ready to give something to government. But the thing is, wherever we can save our taxes, we must have an idea how we can save them.
I mean, it's obviously there are countries where the taxes.
I think you was in UK, right?
Yes, I was. But UK is not considered to be a
Yes.
tax haven as
Yes.
such.
There's
But again,
too
the
much.
point would be that are you asking from a point that even though your clients are in UK, but you're thinking that I'll locate my office in another country, let us suppose Singapore, where the effective tax rate can be
6%.
yeah. I mean, it can be above 10%, but definitely lower than what you have in India.
Right.
So, are you asking from this point of view that instead of obviously not going to the country where the clients are located, if it is a
Right.
anyways a
Yeah,
high tax
that
country.
is my question actually.
So yes, this is something which you can do absolutely. There are people who want to set up an office in Dubai,
Right.
where there is income tax, personal income tax is not there as such. So, and you start servicing your clients from there. But then you would be a Dubai, tax jurisdiction, not Indian tax jurisdiction. But again, if you want to repatriate your profits from Dubai to India, ultimately, which is a parent company. So, I mean to say, again, I would say, just doing it from a tax perspective, I don't know, because if you try and save your 10% or 20%, but then you are setting up an office there, you are incurring those costs. Though you might, from a longer point of view, you save money, but initially it has to be a proper exercise where you actually are saving money rather than putting in more money in terms of setting up an office. Another is obviously whether you are, for you to set up an office in a country, what kind of investments you require actually. If it's just a small office, you can actually, just put on rent, just put up one person out there. Because if you would be sending an employee from India to Dubai, then you will have to be paying the local currency, salary. And then there are issue in terms of immigration also. Let us suppose you try and set up yourself in Australia, let us suppose. So, and if you send an employee from India to Australia, you will have to satisfy their immigration aspects of paying the minimum salary rate also.
Right.
So I mean to say, tax is only just one minute aspect in that. There could be 10 other issues. But yes, these kind of plannings are done, and that is what we call offshore tax jurisdiction. There are certain people who just put up box companies which have no, they don't have any functions. It's just put to save taxes. And then you put up holding structures. Most of the investments into India are routed through Mauritius because of the favorable tax treaty. Because whatever shares you dispose of in India, if you are a company resident in Mauritius, you don't pay any capital gain taxes because of the tax treaty. So again, coming back to your question, I know I'm not answering it specifically because I can't answer it specifically without understanding your business model. But yes, the answer to your question is yes, you can do it. And it would save you taxes also. But It has to be in a proper exercise, whether the whole exercise of putting an office there and incurring those costs is actually advantageous or not. And whether your clients actually need you to service them from there or not. I think the first question should be that, and that should be answered. If you are able to fully satisfy them, fully service them sitting in India, then why go to another jurisdiction?
We have somebody with us, his name is Mukesh Gupta, he's a very experienced chartered accountant of the region. Mukesh, I have a question for you which will be supported by Deepinder. So you are in the region and Thai Chandigarh chapter is focused on the region. What are the main hurdles you feel these guys are facing who are just coming up and starting? What are the basic requirements and concerns?
Basically, to start with, one has to choose a right kind of organization. Somebody was discussing whether I should go in for a proprietorship concern, partnership firm, LLP or a company. That is the first thing a new entrepreneur has to think about. Because type of organization and the legal compliances you will have to do varies. A sole proprietor will have to have lesser legal compliances than say compared to a partnership firm, then say to a limited liability partnership, then to a private limited company or a limited company. So, to my mind, first and foremost is the type of organization one should go in for.
So largely, if you just read, Deepinder on the net or otherwise, people just focus and stress on having a private limited company.
But that may or may not be advisable all the time.
Okay.
Just to add to what Mukesh said, actually, a new way of doing business is normally people try and promote LLP, VR and LLP ourselves. But then a lot of our existing clients, which are mostly sole proprietorship or partnership, they come and ask me, let us know somebody is in a transport business, they come and ask me whether LLP is suitable. Because normally LLP is mostly for professional services firm. So I would not advise immediately, okay, just convert yourself into an LLP because it would give you limited liability. Because if you look at from a loan point of view, if you have to avail a loan from a bank, sometimes they will be very reluctant to give it to a limited liability rather than to a partnership firm. But again, there are a lot of people who are sole proprietorship, and let us suppose they have somebody in the family itself and they can form a partnership. Because from a branding point of view, yes, LLP could be very advantageous. Because tax is again one aspect. Like they said, and compliance is sole proprietorship is the easiest to form. You don't need to do anything basically, you can start it the very next day. LLP again, there are compliance issues. It is incorporated, you pay the same kind of taxes, but then there is a minimum alternative tax also which is applicable. You have to have, apart from your income tax compliances, you have compliances with the LLP registrar. You file your annual returns, you file your solvency returns. So I think it is not a one fit for everyone. You'll have to look at what the
Everybody's perspective depending upon the environment. It will depend upon whether it is a family business or whether it is a new entrepreneurship between two friends or something of that sort. Even that will decide the course of the organization to be made. Supposing the father and son are doing it, you can form a sole proprietorship firm in the name of the father and the son can continue as a salaried employee. But if it is between two, say, friends, they would say that I will not become your employee. So it has to be a partnership firm or it has to be a LLP or it has to be a private limited company.
But in terms of branding, let us suppose we started our firm 2 years back and I personally made a conscious choice because LLP was a very new model in 2010. It was LLP Act is 2009 and we probably would be one of the few LLPs in India and probably among the top 10 or 20 when I formed the LLP in 2010. And obviously to service clients, since I moved back from UK and the LLP model is very popular among professional services from the accountants and the legal firms.
But it will take time.
It has not been that successful actually,
that
what
is
the
true,
government was
that is
hoping, to be honest.
That is true. And then we went to the bankers saying that इतने ट्रक हमारे फाइनेंस कर दो. तो bankers को उस वक्त ये नहीं पता था कि LLP है क्या. मतलब we wasted a lot of time and energy just to convince them what LLP is. That they first of said that we will send it to our legal department what LLP is, whether we can finance the LLP or not. Well, they wasted a lot of our time and energy on that.
I had the same problems opening a bank account because we went to HDFC, we went to two other banks, and nobody was aware of actually which form to fill up because all forms mentioned partnership. So they had to come back from Mumbai, the corporate office, what is this? And then we had to tell them that this is also, our internal structure is, through a partnership deed only, but it's just that we are incorporated. So it took us nearly a month actually to open a bank account. But I think those things have, gone away. People are more aware of it. But yes, bank loan would definitely still exist in terms of being a limited liability. But in terms of, if somebody asks me if I have the option of not being a sole proprietorship, we already are two people. I, as a tax consultant or a corporate consultant or just from a business point of view, I would say try and avoid being a sole proprietor, because if you really want to compete in this,
That is
it's better to move beyond it, because once you are a sole proprietorship, it would never be a professional business as such. It would be
Correct.
more of a, just known by you. So I normally discourage that if you have an option. Or if you want to play safe, try and think it for a year's point of view and then move. But normally it doesn't happen. If you start like that, then you normally 4-5 years you might try and keep it as a sole proprietorship rather than move it to a firm or a company.
I would